In California, it's theoretically possible to buy with as little as 3 to 5% down using conventional or FHA loans, but you'll typically pay mortgage insurance until you reach 20% equity. Are you a first-time home buyer in California or thinking about making the leap? Well, I'm Keith Walker. I'm here to simplify your path and share what every buyer should know to make confident decisions. Just to preface, I'm not a lender, but I can refer you some excellent people to speak with. Let's start with the core steps. Lenders look for your credit score, debt-to-income ratio, steady income, and what you have saved for your down payment. In California, it's theoretically possible to buy with as little as 3 to 5% down using conventional or FHA loans, but you'll typically pay mortgage insurance until you reach 20% equity. For financing options, you have conventional loans. Those are popular for buyers with good credit, starting at about 3% down. PMI usually applies if you're below 20% equity. You have FHA loans for buyers with lower credit or minimal savings, generally only 3.5% down. Other options include VA and USDA for those who qualify. That's military and rural area buyers, respectively. But here in California, especially in the Bay Area, many homes require jumbo loans. A jumbo loan covers homes priced above the conforming limit, about $806,000 statewide, or higher in high-cost counties like Santa Clara County, where it's just over $1.2 million. These loans require a higher credit score, often 700 plus, a bigger down payment, usually 10 to 20%, some programs are as low as 5%, lower debt-to-income ratio, under 43%, more cash reserves and documentation, especially for complex tech compensation. Now, are you earning RSUs, restricted stock units, through your employer? Lenders in California may count RSUs as qualifying income if you have at least 2 years history of vested RSUs, RSUs from a publicly traded company, and proof that RSUs will continue. RSUs can boost your buying power, especially for jumbo loans, by lowering your debt-to-income ratio or increasing your qualifying income. Now, if you have any questions or want to know what you qualify for, drop a comment below, send a DM to me, or reach out today. If this helped, hit like, follow, and share so others can benefit too. I post regular updates and tips for buyers, sellers, and investors, so don't miss out. As always, I'm Keith Walker, here to educate and navigate, not speculate and fabricate. Let's connect and turn your California homeownership dreams into reality.